Hello everyone, this is the trading team at Trade Oxygen here, and welcome to another pause market analysis. This is for the Wednesday, the 2nd of October 2024. This is for micro E-mini NASDAQ index futures. Let's have a look at this. So we recommend you having a look at this pre-market analysis for the same day because this is the post-market analysis. So it's, if you look at this pre-market analysis 10-minute clip, so we recommend to pause this video, go and look at this so you can get a better idea of how the market played. So this video over here. So looking at the economic calendar, we can see there were some high impact news, non-farm news, and some low and medium impact. So this causes volatility in the market. So what we, as traders, what we are looking is for volatility in the market for the price to move. So we can see there will be some price move today due to this high impact news. Okay. Looking at the daily chart of micro mini NASDAQ index futures, in the pre-market analysis we explained the possibility of the price going either up or down because of the nature of the price action over here. The swing quickly to but have a look at the pre-market analysis, you'll get a better idea. But quickly to recap, you get a swing high, a price retracement coming, and the previous day being bearish, the black color candle. So there was a chance of price either going slightly down or up. You can see when the day completed, the candle over here, let me just draw it. So the candle over here, you can see it's bullish, but it's almost like indecision. Like you can see a wick down and wick up, though it's bullish. So it was like a day with the indecision, like in the middle, though it's bullish. So overall, because of this swing high and because of the price coming down, we were slightly bearish biased over on the day. However, overall, keep in mind the trend is still bullish on the daily chart, right? It's a retracement. So if you are bearish, you have to take quick trades. So you have to be careful, right? Okay. So with that, the daily bias is not 100% clear. Like there's no solid daily bias. So when there's no solid daily bias, what we have to do is we have to go into low level charts and analyze the low level charts to see if we could find a bias for the day. If we had a clear daily bias in the daily chart, then what we do is, for example, if we had a clear bearish bias on daily, then we come, let's say, for the 1 hour chart and look for bearish entries, right? If we had a solid daily bias. Another example, if we had a solid bullish daily bias on daily, then we come for 1 hour and look for buy entries. But when there is no solid daily bias, like for example like today, right? Okay, then what we do is we come into the low level charts to see if we can find either a bearish bias or a bullish bias, right? Hope that's clear to you. So when we look at the hourly chart, what we can see is the price moving down on a previous day and the retracement. Again, this swing low being broken down, so it's making a lower low and a swing up, right? And unable to make like a slight retracement and unable to make a higher high compared to this, and then the price coming down, right? Price coming down over here, and we gave reasons in the previous 2 or 3 videos for why the price is coming down. Have a look at the previous 2 or 3 pre-market, post-market analysis videos last couple of days to understand why the price is coming down. And for this day, for Wednesday, what we see is a choppy price action. See, even from Tuesday to Wednesday. So when you see a choppy price action like this, usually it's a good idea to stay away from taking a trade, because you can see it's not showing a clear direction. So this is a range, and it is smart money is accumulating a lot of orders here in this range. Now, when smart money is accumulating a lot of orders like this, the algorithm, after the accumulation of these orders in the range, the price can either go down or go up, right? You and me, we can't control that, right? Can we predict whether the price is going to go up or down? Well, not exactly, because the price can do what it likes. So can you, if you ask at this moment, when I look at this, can I say it's going up? Can I say it's going down after this accumulation? Or can I say it's going to go up after the accumulation? The answer is, well, price, as I said earlier, I'm repeating it again, price can do whatever it likes. If the algorithm wants, it can go down or it can come up. So in a situation like this, rather than predicting, okay, it's going to go up or down, what we have to do as traders is to react. What do I mean by that? What I mean by that is to wait without taking a trade. We have to wait and see the first footprint or the first signs of the price movement, either towards up or down. What I mean is we have to wait for a displacement to happen, something like this. For example, see, displacement, see. So when you see that displacement, then we know, okay, the smart money has started to make a move in, let's say, for example, here, a bearish move. Say, for example, here, smart money bearish move. So at this moment, we are not 100% sure, right? However, we gave some idea in the pre-market analysis. Have a look, the chance of the price, okay, after this, let's say, range and building up orders, we said that there's a chance of the price slightly coming down, slightly, and grabbing some liquidity, grabbing some sell side liquidity. You will see it in the 15-minute chart. It's not very clear here. And then we said there's a chance of price going towards this 15-minute, you could call it as a 1-hour fair value gap as well, but we draw it in the 15-minute. So we said there's a chance of price coming down and trying to reach this 15-minute fair value gap. We said this before the market, before this happens, right? Look at the pre-market analysis, and you can see it has worked, meaning now in the post-market analysis, after market completes, we can see now the time is 7 p.m. New York time. So we gave the pre-market analysis at around 8:45, 9 a.m. So a few hours ago, we said this is a possibility, and now after a few hours later, we can see the price has gone in that direction, right? What I'm telling is not to say that, not to say, oh yeah, our prediction went well. No, it's not what I'm telling, right? Okay, so there's a point here. It's not to say, oh, trader oxygen said the right prediction. No, I'm repeating again for the third time. Price can do whatever it like. Algorithm can move the price. Even if we say, okay, there's a chance of price going up, on another day in a same similar situation, the price might, okay, from here the price might further go down. So you have to understand that point, right? So it's you are not going to exactly predict what the price is going to do, right? So this is the important thing. What we do as traders is, as I said earlier, I'm repeating it again because it's important, is to look at the footprint, look at what smart money is telling us, look at what the algorithm is telling, and then to reflect. However, based on the circumstance, in the pre-market analysis at around 9 o'clock, we said there's a chance of price going up to the fair value gap. It's with solid logical reasoning. So why did we say the price has a chance of going to the fair value gap? If you are not very clear about the fair value gap and some of these concepts we are teaching, don't worry. It's a bit overwhelming. We understand that. But don't worry. Subscribe to the channel. Click the bell icon. We will release some simple short videos in the very near future explaining all these concepts. Okay. So stay tuned until that. Okay, so let's go into the 15-minute and see why we said the price has a chance of going to the fair value gap even before it happens. Let's go to the 15-minute chart now. So before I go to the 15-minute, once again I'm reminding you, in a choppy price action day like this, right? It's better to stay away from the market until the smart money shows us what it's going to do. Otherwise, there's a chance of you losing money. Remember, trading is a high risk um, thing. Keep that in mind. And also, what we are giving you is not license investment advice. This is only for educational purposes. We have to mention it for compliant and disclaimer reasons, government requirements, right? Okay, because trading is a high risk uh, task. But if you have a high probabilistic analysis like we do at Trade Oxygen, right? Over a period of time, you will the account will be highly profitable. Account will be profitable, right? But you have to have a solid reasoning for what you do, like we do here at Trade Oxygen, right? Okay. Okay, so this is the 15-minute chart. This is the drawing what I did in the 1 hour. So because in the 15-minute now we don't need to look at all these days, because we had to look at that in the 1 hour chart. So what I can do is I can delete this. But now come to the recent price action in the 15-minute. So if you look at the recent price action in the 15-minute, right? So in the pre-market analysis we mentioned this as well. The price moved down and a retracement, and this retracement came to the fib 50% retracement, okay, over here. So from this price leg, if you draw the fib retracement, you can see over here the price came to above 50%. These are the fib values, right? At this moment, I'm talking here. If you look at this line all the way to the corner, you can see it's above 50% of the fib. So that means the price has come to 50%. What does that mean to us? That means there's a chance the price could go down, or also there's a chance the price might slightly go up to 60 to 70%. We have to keep that in mind as well. But when it comes here, there's a chance of price, when the price comes to 50%, there's a chance of price going down as well. However, on this day, right, this is the important point. Another important point I'm going to tell you now. When it came to 50%, we at Trade Oxygen, we noticed that there's this 15-minute fair value gap. It's a price imbalance, right? If you're not sure what is a price imbalance, fair value gap, subscribe to the channel, click the bell icon, stay tuned. We will release some simple videos explaining those very soon. So as we notice there's a fair value gap here, and as we notice the price came only to 50%, and as we understand the price sometimes like to go to 60 to 70% fib retracement, putting all that together, we we came into a kind of a probabilistic analysis to say, okay, what the price can do is to go up to this fair value gap, right? So that was our target. That was our judgment. Why we thought the price can go further up? The reason is, you can see in this price action after coming to 50%, all this price action over here. But if I come here, you can see uh, before the 8:30 a.m. New York Open, this yellow line, you can see the price took the loss of London. Okay, when the price took the loss of the London, it's grabbing liquidity, sell side liquidity. Basically, what happened after that was before 8:30, I mean before 9:30, at 8:30, the price again went and cleared the buy side liquidity above the London. So when it clears a buy side liquidity, there's a chance of price going down. Again, if you are not sure why it's happening, we'll release some videos explaining how it happens. Okay. For now, what we want you all to do is feel the market. Okay. From all these live, pre, post, live analysis we provide to you at Trade Oxygen in this channel. First of all, we want you to feel the market and understand that you can make a probabilistic judgments. Okay. After that, when you feel that, and when you are with when you look at these videos daily, And when we release the simple educational videos explaining each and every smaller part, in a short time you can get a reasonable idea of how the markets work. Okay, right. Okay, so then what we noticed was after the price took the London highs, there's a chance of price going down. So at 9:30, where we start our trading, New York time, this green color box over here, this big one, what we noticed was, okay, what we noticed was, let me slightly take it up a little bit like this so you can see. What we noticed was at 9:30, the price pushed down. Okay, interesting point. Another important point now. So what's happening at 9:30? Now, okay, what is our target? Our target, as I said, for the price to go to the fair value gap. Okay, we mentioned that in the pre-market analysis before this happened. Have a look at that video. So because our target was for the price to reach the fair value gap, why? Because there's, if you look here, now above this New York PM session, we got buy side liquidity, right? So if smart money can take the price down, or if the algorithm can take the price down like what happened, and if smart money can buy here, then they can push the price up. So when they buy here, then to take the profits, they need to sell after a while. So for them to sell, like what happened here, they need buyers, smart money, because they have large orders, right? They need buyers. So above this New York PM high, you have buyers, the buy side liquidity. So that is the logic here. Trading can be done with sound logic, without gambling. When you do trading like this, like we explain here, trade oxygen, then it's not gambling, it's it's probabilistic analysis based on a logic. So what we noticed was the price coming down. However, in the pre-market analysis, we said that there is a chance of, because there is some liquidity here down over here. Let me do like this. Let me increase this a bit so you can see this clearly. That is much better. Hold on. Right. Okay. So because now we are looking in this area. Because now we are looking in this area. Okay. Let's analyze this part. So at 9, so it grabbed the, let's say, the buy side liquidity above London at 8:30, and the price started moving down. And in the pre-market analysis, we said when the price started moving down, we said that because there's relatively equal loss here, we said in the pre-market analysis there's a chance of price coming down and grabbing that liquidity, and there's a order block here as well. Excuse me. There's order block here as well. So because of this sell side liquidity down here, we said in the pre-market analysis, and because there's a order block here, we said there's a chance of price coming here and going up. However, when you said there's a chance, it doesn't mean there's a trade there until the price shows what it wants to do. I'm repeating again. This is a very important point, okay? Listen to it again. Even though in the pre-market analysis we said there's a chance of price coming here, grabbing sell side liquidity, order block, etc., okay, right? Even though we said that, right, keep in mind, it doesn't mean there's a trade until price shows what it wants to do. What do I mean by that? See, at 9:30, even though that was one of the scenarios, we had another scenario in the pre-market analysis for the price to go down. So there were two scenarios. One scenario is for this to happen. Okay, I will keep it like this, so you get a clear idea. Then in the pre-market analysis, we said the second scenario is the price further going down and taking this sell side liquidity, right? We said that, and let's say hypothetically this one, and then the price to go up. Okay. Now what we are telling here is price can do whatever it wants. We as traders has to reflect to the what the price is doing, what the smart money is doing, and take our decisions. So at 9:30 we notice that this point is not going to work, right? Even though there was a chance, there was a possibility of it going stopping it. No, it didn't work. We didn't see the footprint. If it happened, if the price halted here, then we would have gone to a low level. This is 15 minute, 5 minute, 2 minute, 3 minute, and see if there's an entry, right? Okay. So at this time, did we go to 5 minute? No. Why? Because the 15 minutes said, no, I don't want to stop. The price says, no, I don't want to stop. The price says, price don't want to stop. So then we had a look at this point. Did the price stop here? No. The price is showing us signs that it don't want to stop here. What does that mean? That means the price is grabbing further liquidity. What does that mean? What that means is the price algorithm and the smart money is targeting this sell side liquidity. Can you see the sound logic behind what we explain? See, because there's sell side liquidity. So if the price comes here like it came here, what the algorithm does and what the smart money does is it's grabbing a large quantity of sell side liquidity. These large pools of sell orders are here. Sell orders are here because uninformed traders, they have their sell orders here. Okay, then if you ask why uninformed traders have their sell orders here, 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 if you're not very clear, subscribe to the channel, click the bell icon, stay tuned. We will release videos explaining each and every point. Okay, but until that, you need to feel what the market is doing, as I said. So don't give up. Okay, it's overwhelming, but stay tuned. Look at every video we release, and you will get that knowledge very soon. Okay. So what this algorithm does is it grabs more liquidity. Interesting, isn't it? Right? Once it grabs that liquidity, now the algorithm has moved the price up. That means for smart money, that's more than enough orders they collect. So what are the orders they are collecting? When they have sell side liquidity down here, sell side liquidity, down here, sell side liquidity, that means those are sell entries. So what smart money does is, smart money is banks and large organizations, large proprietary firms, what they do is they grab all these sell entries, meaning they buy. So when there is sell side liquidity, smart money will buy them. So they buy here, they buy, right? They buy all those sell orders. When they buy, now what do they want the price to do? They want, if they buy, for them to make profits, they want the price to go up, isn't it? Right? Interesting, isn't it? So then the price moves up. See, it's back. So the logic at Trader Oxygen based on ICT trading concepts is having a sound logic, right? We do things with a very clear logic behind what, when we take a trade, it's done logically. So now we understand when we see this, and when we see this green color candle, we understand that is the start of, that is a possible displacement. It is a displacement, and that's a possible bounce. Why do we say that's a possible bounce? Because now looking at the overall understanding of the price, okay, let's look here. So now putting everything to the picture, we can see the smart money has accumulated the positions, and our target, we are thinking of the algorithm clearing these highs and going to the fib 60 to 70. That means for a premium, because the price is at a discount now. If you look at this price leg, price is at a huge discount now in this price leg, right? Because it's below 50% of the fib. So the price now should move to a premium, that means above 50%, right? That's how price works. How price works is, it goes from, let's say, premium to discount, discount to premium, right? And then it looks for imbalances, right? That's how price works. So based on that logic, we saw the footprint, and then can we take a trade like this in the 15 minute? Not exactly. We have to go to low level charts and see what's the decision we can make, right? So with that, we went to low level charts. So this is a 5-minute chart with the same drawings, and this is that turning point right over here, and we went to 5 minutes, we saw this green color candle up over here, right? This green color candle, that is displacement, right? And it's a possible point where price can bounce, as we explained, because of the chance of price or the need of price moving up. If I show it in the 15-minute chart, even the 1 hour, the need of price moving up, isn't it? Like as we explained for the fair value gap, right? It's choppy over there. Okay, but if you look at 15-minute, you can see this price leg, okay, in the 15-minute, this price swing coming all the way down. Now the price need to retrace. So the chance of, so the need of going to the fair value gap, right? All that comes into 1 point now, right? What does that mean? That means now we are at a turning point where, with the possibility of price going up, and we see displacement. And with the displacement, what we need to see now is order block. It's good to have order block, but first a fair value gap. If with a fair value gap, if we see order block, then it makes the probability higher, chances high. So in the 5 minute, do we see order block? No. Okay, so what's the order block? What's the fair value gap? Okay. If you are not sure, we will release those videos as well. Okay. We know some of you don't know those concepts, so we'll release those videos. Don't worry. We don't see a what you call a fair value gap here. So then what we had to do was we had to go into, let's say, 4 minute. So we went to the 4 minute chart in the live, during the live market, we went to the 4 minute chart, and we noticed that there is an order block here. So I will make it quick now because the video is a bit long, but don't worry, the concepts are all covered. So the order block, we found the order block. Then what we were expecting was, at this moment, did we take the trade? No. What we were expecting was, when the price made this order block here, when the price made the order block, we wanted the price, because that with the displacement, right, that's what makes the order block valid, the displacement. We don't see we see like a large set of black color candles down. So we don't see like a nice order block here. This is like a V where the price has already come down and balanced. So that's another point. We don't see a clear order block and the price has kind of balanced. So that's why the price didn't come down, because what we were expecting was for the price to do this. So what we were expecting was, when the price made this order block like this, we wanted, see, this is the important point, we wanted the price to come down here to the order block and then to move up. Okay, but that did not happen. Okay, let me put it in blue color so you see. So this blue color line was what we were expecting the price to do. If the price did that, then we would have placed a buy order here, taking the entry here, stops down and targeting these highs over here, right? And not only those highs, the order block, sorry, the fair value gap at the top. So that entry, we would have taken partials here, and we would have taken partials here, and keep another set of partials remaining till the order block, till the price reached the order block. However, now you can see we were very close for a high probabilistic entry. However, the price did not make the last move. So price just rushed all the way up. Why is it? You can see one reason for that is, can you see that when the price came down, these black color candles, and when the price had the displacement, it just made like a V shape, right? It did not make something like this, like it did not make smaller moves like this, right? Like this, it did not make that. Okay, I put that in another color for you to understand. If price did that, I put it in black color, then the price would have done what we said in this blue color candle, right? Because what happened here is the price came down and straight away went up, which means the price got balanced. When the price got balanced, when the when it's balanced, like he push down and push up, then there's less chance of price coming down, even though there's a small imbalance here, right? So these things, there's the theory behind what I said. We'll release some videos in the near future about that as well. So overall, because of this, we were very close, 90% we were close to take the trade, and if we took the trade, it's definitely going to be a profitable trade with this scenario what we explained, because the price looking for the fair value gap over here. It all happened 90%, 95% we were ready to take the trade, but what happened was last minute the price did not come and give a chance. It's like the bus left. You know, if you think it as a bus, we were thinking the bus to come to the bus stop. See, sometimes the buses go passing you without coming to your bus stop, isn't it? Have you noticed that? The public transport. So that is what happened. The bus did not come to you, did not stop at your stop. It came down a little bit, but it all of a sudden it rushed away. So that did not give a trade. However, hypothetically, if the price came down like in the blue color candle, this is the entry, this is a stop loss below this, and the take profit would be of 1 to 4. When we take partials and all, it's a 1 to 4 risk to reward profit. Hope you enjoyed this post market analysis, which was very educative. Stay tuned. We will release more videos, and we'll meet you with another pre-market analysis today as well, right, for the next day. So stay tuned for the next video in a couple of hours. Stay safe until that. See you all.